Hello traders, good evening. Welcome to the market analysis and trading plan for 4th of August 2022. Let's see what happened today first, and then we'll have a look at the probable moves that the market can give for tomorrow. Today, as the bias was towards the short side till the second half, and then I was majorly trading Bank Nifty, which was weaker than Nifty, and you could see that the 15 to 40 to 50 levels were aggressively defended, which is something I shared in my Telegram channel as well. That 15 to 100 is a level which can be aggressively defended by the players, since this is previous day's low. Previous day's low is always an important marker. Always remember that this is a trading tip that I'll share with you. Whenever you talk about day low and high on an intraday basis, these do not mean anything. In fact, I see a lot of traders putting on short trades on day low breaks and day high breaks. Day low and high are not as important as previous day low and previous day high, because when we talk about day low and high, this is of a session. This low and high is of a session which is still in progress, whereas previous day high and previous day low indicate areas of a session which has already completed, the extreme ranges of a session that has trading session that has already completed, and it tends to have hold much more importance from a price action and from an auction market perspective than compared to intraday lows and highs. So 17 to 50, sorry, was an important previous day low marker, and you can see that it's from the same area that index went up again. So if you look at order flow charts, now this is a tip which I usually follow, and I also tell people I wasn't trading Nifty today, but since Nifty is a stronger of the two indices, you know my style. I usually prefer to be long on the stronger index and short on the weaker index. So I was focused on selling Bank Nifty more. At any important reference level, whenever you see an extreme imbalance in charts, that is, you can see 1.9k and 2k contracts in Nifty on the ask side, indicating sellers being absorbed by passive buyers. Basically, limit buyers are absorbing sellers, limit orders of longs. And then you see the same uh, occurrence again at the same level. You can see that it is more or at the same level, and then price moving up. This is nothing but a successful retest. Buyers have successfully reinforced the fact that they can absorb the selling which is happening at this level. So this trapped seller would now look to exit, which can create a beautiful up move, which is exactly what happened. So this is a cue that I'm always on the lookout for, especially at previous day highs and low. I repeat, at previous day's high or previous day low, I look for extreme imbalances on the bid or on the ask side, and in the opposite direction. For example, if market is coming down, I look at the bid side, because bid side represents sellers. I would like to see sellers being trapped, selling being absorbed by limit passive buying, so that aggressive buyers can take the prices up, and we can see a covering move when sellers exit, and vice versa when we are at previous day's high, for example. That is, I would like to see a large number, a large imbalance on the ask side, and buyers getting trapped there, buyers failing to push prices up forward, and then subsequently sellers taking control of the markets. So in this case, it's at the bid side. Since we are moving down at previous day low, at the bid side, I'd like to see extreme imbalances on the bid side, which is what happened. I'm seeing large sellers coming in, but then these sellers are failing to push the prices to the downside. Buyers are absorbing. This is a combination of market shorts and limit longs. And when the retest of the same level happens, and you see that the retest is successful, that is, this particular area is being held by buyers, this is a good place to go long above the high of the candle with the low as your stop loss. Now let us say, even if price was coming down at this moment, you cannot say for sure that are sellers going to break down, or are buyers going to hold this ground for the second time. I follow something I call as one block rule. So any order flow technique or analysis that you use, let us say you're using a block size of 10 points, and you see, let's say, a large imbalance in this side on the bid side, which if you interpret to be market sellers, then wait for at least one more block to form before you actually execute a trade there. Even then, you are getting one of the earliest signals on a trade compared to any other method of analysis. So this is something that I personally follow. So in this case, if I notice, for example, 1.3, and let's go with the assumption that this is a 10-point tick size. Actually, this is a 5-point tick size. So 17,245 to 17,240 in this case is my low, for example. And then in that case, I would rather, and I am going with the basis assumption that these are large market sellers. And at this point of time, when price is here, it would be almost impossible to say whether it's going to continue to move up or move down until this absorption happens. In such cases, that's my whole point is, in such cases, you wait for one more block to form, that is a 5 more points, let's from 17,240 to 17,235, and you put on a short trade, and vice versa for longs. Even in such a case, you would still be successfully putting a long trade somewhere between 17,250 and 17,260, which is just picking the lows of 10 points. So if the market low is 17 to 40 and you are picking a trade between 17 to 50 and 60, then that is a very good trade, I would say. So this is a technique I personally follow, something called as a one block rule. That is, I wait for a block size to form. It's just one block, so no harm, no foul, waiting for that additional confirmation, especially in choppy areas. Now, coming back, uh, if I talk about my trading plan for tomorrow, then I see that Nifty has yet once again made another structural swing high. So, as of now, the largest buyers, as per volume analytics, are sitting between 17,276 and 17,315. Until these buyers start giving up, or I see fresh selling coming in at these areas at the highs, I will not short this market for now. And let's say tomorrow we open again, let's say with a mild gap down or somewhere around 17,276 and 17,315. So this is an area where I would look rather to trade the bounces until it breakdowns. Only when it breakdowns, I would rather put on a short with target of 17,200 this time. Of course, the previous day's low matters, and this is just 30 points forward. So then we would be rather getting into a lot of choppy context at this point of time. For now, when I look at Nifty, the bias is long, and I would rather wait for uh, fresh selling to come into the markets since we've broken the pivot high before I punch in any short trade in this market. I'd wait for evidence, definitive evidence that the selling is higher than fresh selling, whatever is coming in is higher than the short trades are higher than the longs that are holding up the markets. And these longs are built up between 17,276 and 17,315, the largest longs of today. To the upside, if I see on a higher time frame, the next sellers area is 17,650 to 17,690. It is a lot of open ground between, especially for an intraday traders, almost more than almost 1%, more than 1%. I'm so sorry. So if we get this move on an intraday basis, well and good, or else this is a reference that we need to use on a positional basis. But between this, there are no important reference areas as per volume profile. So if there is no reference area, then we can't force a reference area out of thin air. So we need to trade it on an R basis, risk to reward basis. Moving on to Bank Nifty, if I look at Bank Nifty, 37,787 to 37,882 is the important reference that I'm looking at, and until we are above this particular structure, above this particular zone, then I would again look for longs. In this case, Bank Nifty, as I shared some time back, Bank Nifty is looking weaker than Nifty. This was something which I shared in my analysis 2 days back as well, that the structure is now changing from a comparative basis and Bank Nifty is weaker. So I would rather wait for this particular high to be taken out in case of Bank Nifty before I attempt any longs. If Nifty being expiry tomorrow, if Nifty starts showing weakness, then I'd rather prefer selling calls in Bank Nifty, look for a short setup to form in Bank Nifty than in Nifty, because Bank Nifty is weaker compared to Nifty. The thumb rule is always be long in the stronger index and be short in the weaker index. So I'd rather wait for this high of 38,200 to be taken out before I put on any long trades in case of Bank Nifty. One good location where I can look for longs is if I get a pullback around this particular price structure. This is where a lot of volumes are transacted. Again, when I look At these are limit orders. Aggressive position building was done by longs today between 37 787 to 37 882. In fact, somewhere around this pullback and this up move, more than the large seller who had initially come in at 37 960. Today there was a large seller who came in at 37 960, between 930 and 960, sorry. More than the shorts by this seller, longs had come in at this zone. So the 37 930 to 960 level now rather becomes invalidated and useless from a data perspective for us. This is the one I'm talking about. So for tomorrow, keep an eye on the price band of 37,787 to 38,882, and any pullback to this, look for rejections to take a long. If it breaks, then this would be a happy shot all the way to 37,672 and then 37,424. So these are the references that I'm looking at on the short side. On the long side, the bare minimum is for us to wait for 38,200 before we attempt a long. If 38,200 breaks, then again, until the next 2% in bank nifty, there aren't any higher time frame references. So as I always say, if there are no higher time frame reference points where institutional buying or selling happened on a near the current market price, then we don't force the levels. I simply trade on a risk reward basis, looking at the intraday and the 2-day context. I hope this video was useful, folks. If yes, please make sure to like and subscribe to the channel. Also, I share my trades and live markets in Telegram and various updates. If you haven't joined, do check it out. The link is given in the description below. Thank you all and see you tomorrow.